Hey everyone, welcome back to part 3 of our beginner trading course. If you have been following along, you know that in the first 2 parts, we explored the psychology of trading and laid the foundation for understanding the market. But today, we are finally stepping into the world of charts. If you ever looked at a stock chart and wondered, where should I buy? Where should I sell? This is exactly what is done by something called support and resistance. They help you figure this out. By the end of this video, you will understand how these levels work, why they form, and how to use them in your trading decisions. Let's dive in. First, let's answer a simple question. Why even look at charts? Charts aren't random lines going up and down. Charts tell a story. They represent the struggle between buyers and sellers. And they reflect human emotions, which is fear, greed, hope, and panic. When more people want to buy, prices go up. When more people want to sell, prices go down. Charts are basically a visual map of supply and demand. So if you learn to read this map, you're already ahead of most beginning traders. And the first thing we look for on this map is support and resistance. As you can see on the screen, this is an example of a typical chart. We will come back to this to discuss this in details. But first up, let's know what is support. Think of support as the floor beneath the price. It's a level where buyers step in and say, okay, at this price, I think it's cheap enough and I'm buying. Support is unbroken low price or area on a chart where demand increases. When the price falls to this level, there's enough buying interest to stop it from falling further. For example, imagine a stock keeps dropping to $50, but every time it hits $50, it bounces back up. That $50 level is acting as a support, a price floor where buyers jump in. But here's something very important. Support is not always a single price. Sometimes it's a zone or area where demand is strong. And if the price breaks below support, it often means sellers have taken control. So if you look at this trend here, this is how a support area is formed. As you can see, the price in the green trend keeps going up, coming down, going up, coming down, going up, coming down. What it's doing is bouncing off the same price. So that's your support zone. Now let's discuss what is resistance. Just flip it around. Resistance is the opposite of support. It's the ceiling above the price. A level where sellers step in and say, hey, at this price, I'm taking profits, or I think it's too expensive. I am selling. Resistance is an unbroken high price or area on a chart where supply increases. When the price rises to this level, there's enough selling pressure to stop it from climbing further. So let's look at this by way of example. Follow the trend below. Imagine a stock keeps rallying to $100. So the green trend is rallying to the black line, that's your $100. But every time it hits $100, it keeps coming back or pulling back. That $100 level acts as a resistance, a price ceiling where sellers show up. Again, resistance can be specific or a wider zone. And if the price breaks above the resistance, it often signals buyers have taken control. So here's something really cool. When support breaks, it often turns into resistance. And when resistance breaks, it can turn into support. But why? Because traders remember those key levels. If a stock crashes below a previous floor, that floor now becomes a ceiling. If it breaks above a ceiling, that ceiling can become a floor. Example, A stock kept bouncing at $50 support. You can look at the trend here. It breaks below $50. Now next time it rallies up, and $50 now acts as resistance. So your previous support has become resistance. And this time you will have a new support formed. This concept helps the traders predict where price may struggle again in the future. How do we identify support and resistance? Support and resistance can be found in many ways. Previous highs and lows, round numbers like $1, $2, 10, trend lines connecting multiple lows and highs, chart patterns like double tops, double bottoms. For now, we'll focus on previous highs and lows. A simple method: find places where price reversed multiple times. Draw a horizontal line at those levels. Each time price bounced from a low, it's a potential support. Each time price dropped from a high, it's a potential resistance. And remember, support is an unbroken low or area on a chart where demand increases. Resistance, on the other hand, is an unbroken high price or area on a chart where supply increases. Now, let's look at this by way of a live example. I know you guys are beginners. There's a website that I use, which is called stockcharts.com. So you can get onto this website and you can get charts for all the stocks possible. We're using Apple, so you can put in the symbol of the stock that you want to check and choose a period. We have chosen weekly over here. Okay? So how do we identify support and resistance? Let's start looking from the right. But to do that, you got to draw lines. So press on annotate. So choose a horizontal line and a color of your choice. I'm choosing green. And let's identify support from the right-hand side of this graph. And as you can see, the latest price of this stock is $210.79. Now, where is the unbroken low when you start from the right side? It's right here, 168.99. Now, where's the next unbroken low? Is it 218? No, we already broke that at 168. Is it $195? No, we already had broken it at 168. The next low would be at 163.09 because this is the price mark that has broken the previous support. And as you go along on the left, where do you see is the next low price? Would it be 164? No, it will be at $142.28. So this is how you identify support, and you can keep going towards the left and identifying the unbroken low from the point that you started. Now let's identify resistance. We go back to the right side of the graph and we try to identify the resistance. The first high price that you see on the right side is 214.28. And change the color so that it's not confusing for you. I have chosen blue. You can choose the color of your choice. And as you move along on the left, you can see the next high is at 249.67. That's your next resistance. Let's say you said the next high after 249 is 236. Is that even possible? No, because that's lower. The next high will be at 259.47. So this is how we identify resistance. Now that you have learned how to identify support and resistance, you're good to go with the charts. Now let's move on to a very important element of trading, which is support and resistance across different time frames. One important factor that new traders often miss is time frame. Support and resistance levels change based on the time frame you're looking at. Different types of traders look at different time frames. For example, scalpers use 1 minute or 5 minute chart. They want quick entries and exits. Day traders, on the other hand, might use 5 minutes or 30 minutes charts for intraday setups. Swing traders prefer the 1 hour, 4 hour, or daily chart to hold positions for days or weeks. Investors may use daily, weekly, or monthly charts. The higher the time frame, the stronger the support and resistance. So in case you got confused with the different terms that I used, I have summarized all the terms in a table. You can take a screenshot. Here you can see what a scalper does, and what a day trader does, and what a swing trader does, and what a position trader does. What's key to understanding is support on a higher time frame is more powerful than support on a lower time frame. Before taking any trade, always zoom out to the higher time frame and look out for major support and resistance zones. Smart traders often look at multiple time frames. They find major levels on the higher time frame and refine their entries on the lower time frame. This is called multi-time frame analysis, and we'll explore it in more detail in a future video. So before we move further in our course, let's get back to the charts and let me show you how you can actually choose different periods or time frames. As I explained to you, resistance and support on this chart, if you go up here, you can choose the period or time frame, and you have the option here to choose daily, and you can see the chart changed. You have the option to choose 1 minute, so you get greater granularity in the price, and so on and so forth. You have all the options here, and this helps you to look at the price fluctuations in greater details. Let's continue. Why do support and resistance work? You might wonder, why do these levels work? Because your psychology plays a big role. At support, buyers remember price was cheap here before. They're willing to buy again. At resistance, sellers remember price was expensive here before. They are willing to sell again. Also, big traders or institutions often place large orders at these key levels, reinforcing their strength. That's why even though markets change, support and resistance zones tend to remain important. Types of chart movements. Before we move on, let's talk briefly about how prices move. Markets move in three main ways: uptrend, higher highs and higher lows; downtrend, lower highs and lower lows; and sideways trends. Prices move between support and resistance in a range. As you can see, there is a graph here for uptrend, and you can see the price is actually going gradually up. When you look at this line, it shows you the peak and there is an uptrend. Similarly, a downtrend looks like this. The price gradually fluctuates and it keeps dropping. And when you draw a line, you can see that there is a downtrend. And a sideways trend is where the price keeps bouncing up and down between support and resistance. And you can see on this chart, this is a sideways trend. Knowing the trend helps you decide, do you trade breakouts or trade inside a range? Support and resistance levels guide these decisions. We'll cover trend lines and patterns more deeply in later parts of this course. Key takeaways. Support is equal to price floor where demand increases. Resistance is equal to price ceiling where supply increases. Support and resistance are not exact prices but zones. When broken, support can turn into resistance and vice versa. You find these levels by looking at previous highs and lows on the chart. They work because of trader memory and psychological reactions. Higher time frames is equal to stronger support and resistance. But here's a critical point. Support and resistance are not the only tools for deciding entries and exits. We combine them with candlestick patterns, indicators like moving averages, and chart patterns, which we will cover in the coming parts of this course. So what's next? Our next video is going to be part 4 of this series, where we are going to learn about candlestick patterns, how to read each candle, what it tells you about buyers and sellers, and how to support reversals or continuations. This will help you add extra confirmation to the support and resistance levels you learned today. So make sure you subscribe and turn on the notifications so you don't miss it. If you found this video helpful, give it a thumbs up. Drop a comment with your questions and share it with your fellow traders. Thanks for watching and see you in part 4.